right, welcome. So welcome to day 27 of this YouTube mentorship. We're almost done, and it has been an amazing ride all the way. All right, so if you have not watched the previous video, as usual, I would encourage you to go through those previous videos because that is where you can get a better understanding of what you're about to do here. All right, so this is day 27, and we're talking about something very important. Talking about the draw on liquidity and the daily bias, right? One of the issues that a lot of traders face is that they're not able to tell what the market is going to do, where the market is going to go. So the purpose of daily bias is to know, okay, the market is supposed to drop to this area, the market is supposed to go here. That is the purpose of understanding the daily bias, right? So cover the daily bias. Let's go to the daily bias and draw liquidity. You have to understand it, they go hand in hand. If you can understand the daily bias, then you can tell, okay, this is where the market is going to draw to, right? Right, so that's basically what we're going to talk about today. Daily bias and draw liquidity. So the purpose of draw this is to know, okay, this is where the market should go. This is where I anticipate the market should move to, and then you can now frame your trades towards that direction, right? That's the purpose of this particular teaching, to help you to identify, okay, the market is supposed to go here, then you can now frame your bias towards that area. So a daily bias is simply where the market should go to, right? Is the market supposed to go up or down? Because in the financial markets, there are only two directions. Either the market is bullish or the market is bearish. So if the market is bullish, then you have a bullish daily bias that is supposed to go up. If the market is bearish, then you have a bearish daily bias, the market is supposed to go drop down. So there are basic things we look at when we want to know, okay, today's mark candle, is it supposed to go up or go down? So that's basically what we're going to discuss. How do you know if the market is going to be bullish today or bearish today? Because the purpose of trading is to make money, and you can only make money when you are trading in the right direction. That means if you're buying and the market is going up or going bullish, that is the only way you make money. And if you're selling and the market is going down or bearish, that is the only way you make money. So the purpose of this teaching is to understand, okay, where is the market going to drop to? So there are two basic things we use to determine daily bias or draw liquidity. Those two things. Number one, there are two things to look at. Number one, you look at what? Imbalances or fair value gaps, right? So look out for fair value gaps. But I've done a teaching on that. You can call it an imbalance, right? Right? A fair value gap or an imbalance. That's the first thing you look at. And number two, look at what? Liquidity pools. So the two things that drop price, right? Look out for what? Fair value gaps or liquidity pools. Those are the two basic things that drop price. And there are other ones, which is other blocks. Other blocks also drop price. But for the purpose of this call, these are the two necessary and most important ones. Right? Market is drawn to fair value gaps and market is drawn towards liquidity pools. Those are the two things that drop price. So if there's liquidity down, the market will tend to go bearish to take out the liquidity. So the market is drawn to fair value gaps and liquidity pools. And it's usually very beautiful when you see liquidity pools and fair value gap at the same spot. For instance, now, if you're bearish and the market gives you bearish structure, for instance, now you're bearish, right? Maybe you want to sell this market, right? And then down here, you're seeing what? An imbalance down here, right? And inside there, you're also seeing what? A liquidity pool. Maybe some kind of something like this, right? Some kind of equal low, right? Now you're seeing the equal low forming right just above the imbalance or just right about it. So now this is because of very high probability trade because now you have to draw liquidity down here. Just this kind of stuff me I love. I love stuff where I can see liquidity and I can see liquidity pools. I can see imbalance and I can see liquidity pools just opposite my trade. So the goal of draw liquidity is to see these things at the opposite side of your trade. Let me see if you're bearish. What if you see liquidity pools, something like an equal low or an old low just above an imbalance. So note that it must not be this way. There are times in which the only thing we see is the liquidity pool. That's the only thing. Sometimes you see only liquidity pool. Sometimes the only thing we see is imbalance. So the purpose, but other times you will see both of them forming. So this is kind of sort of for me. This is why I prefer. I prefer sort of so I can see liquidity pool and imbalances, give me what a double draw. So if I'm now selling this market, I'm not targeting what this liquidity pool, this imbalance. That is where I'm targeting, right? So it's very easy to spot these things. If you can identify where the market is supposed to go to balance and imbalance, or the liquidity pool the market is going to reverse, the market is going to take out, then you can anticipate that this is where the market is going to go with a higher degree of precision, right? Don't forget that our profit blueprint is still out. It will be launching in 3 days or 4 days, right? If you want to be part of it, just simply use the link in the description. All right. So that is it. So you're looking for liquidity pools, you're looking for imbalances. That's what gives you a draw liquidity. The market wants to balance an imbalance or it wants to take out what a liquidity pool. So let us go to reach to identify these things. Right? This particular call will not be so long, just a very direct topic. But it's direct to teach, but it has a lot of back testing that are involved. Right. So let's go back in time to spot these things, right? Look at a very good example here. What I was talking about now. So I was talking about, right? So what I'm talking about, right? Now look at this example here, right? Watch this. The market took out this liquidity pool, right? The market took out this liquidity pool here, right? And after the market took out the liquidity pool, what do we have here? We had what? A break of structure, right? So we had what? A break of structure right here. Did you get really biased now? We had what? A break of structure here. Market going later low. And we had a break of structure right there. Right. So and then we came back to this imbalance. So if we have taken as this liquidity pool here, our market is bearish. Remember what I told you guys. Like now you're looking for what? Opposing liquidity or opposing imbalances. So your daily bias for this market because bearish because number one, we have taken out this bullish liquidity pool. That means we can anticipate what? A reversal, right? So we have taken out this old high and then we have given what a break of structure. So this simply implies that we have biases now. So we are biased now because we have this imbalance down here. So we have this old imbalance here. Have this favorable gap down here, which was not filled properly. And the imbalance was not properly filled. Right? The imbalance was not properly filled. Right? So we have that imbalance there, which was not properly filled. And then if you look very carefully, we had what? An opposing liquidity pool there. So we even had two liquidity pools there. Two of them. So look at the first liquidity pool there. We had this old low. Can you see? Below the this is liquidity pool. And then we have what? This overall liquidity pool here. So look at this overall liquidity pool down here. Right? So you can see that we had the reasons the market should go short. Remember, we took out what? Buy side liquidity and then we broke structure. Remember, when you have a daily bias, also consider structure because you have to wait for structure to align with the bias. Note that you're not going to be taking trade just based on bias alone. You have to wait for the market structure to confirm your bias. That means if you have bearish bias, then wait for the market to give you what a bearish structure first. So when the market has given you a bearish structure, then you now have what the go ahead to take your trade. All right. So we had this liquidity pool here. We had this and how had this imbalance. So we said we had what draws on liquidity to the downside. Like I said, the market finally what the market finally did what came down. So if you are trading this trade, you are simply looking for what sell opportunities at every reversal or every retracement. You look for sales. As market retraces, you look for sales. Market retraces again, you look for sales. That's how we have been taking this trade. We are just looking for sales. Like for instance, now we had what this other block printed here. As market broke structure, we had the break of structure and then a retest into the imbalance, right? So we had this imbalance that was formed inside this other block, right? So look very careful, there was an imbalance inside this other block. So I won't point it out. Look very careful because an imbalance inside there. Inside of that block, that would have been a nice sell. The market took out this first low. The market came back where? into an imbalance. So let's just take this off so you can see what I'm talking about. So look at that first liquidity pool there, feeling that imbalance. We had another imbalance here. Look at another imbalance down here. Can you see that? Had an imbalance there. So that is, so in that another imbalance there, what happened? We broke lower. And finally what? We came to the low. So that is how to frame your daily bias. You look out for what the market is doing, and then you can say, okay, this is where the market is going to go based on my what bias, right? So that is basically how you do your bias. You look out for liquidity pools, you look out for imbalances. So the market took out this liquidity pool as last, right? So what we answer what the reversal, right? And since then we have been bullish. So the market finally came down, cleared this liquidity pool completely. So this did not really clear clearly. So how this market came back there, cleared it very well. So this is how we are giving you what's a bullish bias. So the market has been bullish ever since. So that is basically it. You have to have a bias in the market. It's helpful to know what the market is doing. So you can also determine your daily bias based on the weekly chart, right? You can determine your daily bias based on the weekly chart. For instance, now as you took out this liquidity pool here, what do you anticipate? Reversals, right? Remember that the market will reverse when it takes a liquidity pool. So when the market take out the liquidity pool, what you should look at for what if a lower time frame break or structure. And that's what you don't have a bullish bias. And if you have a bullish bias, where will your first bias be? If I was to take this bias now, my eye will go here to this old high here, right? I will go to this old high here. That will be my first. So now we have taken this liquidity pool here. That means we are anticipating the reversal. Okay, now to where? Where should market reverse to? Should reverse towards this old high because the market goes from buy side to sell side and from sell side to buy side liquidity. And if you have not watched my video on liquidity or buy side, sell side, do want to watch the previous video before this one. All right, to help you get a better feel or better understanding for what possible. Just click on, go to the, I think, I don't know if it's the 8 or the 9, click on the video of the buy side liquidity video and the sell side liquidity video. Right, they are all are different and they are all in this YouTube playlist. All right, so you can see, so you can see this. Right. So that will be an area of liquidity. Now looking at the dollar index, you can see that we still have liquidity up there, right? So for me, I will targeting this high. Although it may not get there, but look at this liquidity pool here because look at this. You have this liquidity pool, let's say, right? You have this liquidity pool, let's say, right? This liquidity pool is still resting there. If I was to buy, I would still be looking at the market to go there. And then if you look very carefully, we still have imbalances above here. So look at this, we have this imbalance just above it. We see everything balance, old imbalance there, which was not filled. So market can still want to fill the imbalance more by going to the higher quadrant. And we have what this big imbalance. So I feel the market might still go higher, right? Because we are still very bullish. And if you look very carefully, we are actually playing off an imbalance right now. Watch this. We are currently playing off this imbalance between these two candles, right? You can see this imbalance here. So you can see that we're actually playing off an imbalance there, right? So that's what I expect. The market is still running bullish on the dollar index, right? So this is very, very beautiful. Right? So the market that is has started the imbalance twice, could not break it. Most likely next week we should see the market run into this. This is my target, this high here. And just to confirm that, I'll just put the link. I won't do that now. Maybe after this call. All right. So let's just look at bias once more on another pair. Let's also look at the last pair for bias to understand bias properly. This teaching, I've done more teachings on bias in my paid mentorship. So if you want to be part of our paid mentorship, just use the link in the description to join us and you can have more insight to what I'm talking about, right? So I'm not teaching you guys bias, I'm not talking about lower time frame or anything, just you to understand the bias of the market, right? So now watch another one here. So before I go to future projection, let us talk about the past. I just talk about the past first. So looking at this weekly chart, you can use a daily bias. You can get a daily bias on the weekly or on the daily, right? So now watch this. We broke structure bullish. So we had this imbalance up here. So we had this imbalance here. So we hit this imbalance here. Right. We broke structure. We had a bullish break of structure, correct? We had a bullish break. We took out all this liquidity pool here. All this pool was taking all these lows. We had a break of structure. The market going above this recent high. And what do you expect? We have what liquidity pool above. You can see we have liquidity pools above. Right. We had this liquidity pool here. We had this liquidity pool here. We had another one here. And this liquidity pool, this liquidity pool here. And then we also have these big imbalances. You can see this imbalance, this big one here, just above it. Because we had a bullish bias, right? Can say the bullish bias is beginning to form now. Right? Can say the bullish bias is beginning to form. Right? Can say the bullish bias is beginning to form. Right? So can say the bullish bias is beginning to form. Just take a look at this. Watch this. Look at that big imbalance. Right? So can see how the bullish bias is beginning to form. As market tap into this imbalance, at what happened? We start going for what? Liquidity pool, imbalance, and then liquidity pool. That is basically how you frame your bias. Looking at what the structure of the market, and looking for what imbalances and liquidity, they are opposite to your trade. At the opposite end of your trade is very easy to spot. Very easy to spot. If you can understand this thing very well, then you're going to really kill this market. Very easy to understand this stuff. It's not taught anywhere else. And of course, I learned this from ICT. So if you can understand this, you can be able to frame your trades. And the best time frames to identify bias is what the daily chart and the weekly chart. So when you just have your bias, you can know the market should go what bullish. You can look for what when market gives what a bullish structure, look for bias. You continue looking for market to give you what that bullish structure. All right. So not like they're just going to just click buy. You have to wait for market to give you what that confirmation. The market wants to go bullish. Right? That's how to do it. You wait for the market to give what that confirmation to go bullish. All right. So that is it. So let us go to a lower time frame and try to see if we can still identify this. Let's go to the daily chart now. I can see if we can go to spot bias. So you can see how markets came to the weekly that weekly imbalance and they started giving was bullish sort of should have just been buying this. The market is decreasing, you're buying, you're buying, you're buying, you're buying, you're buying, you're buying. I can see a lot of entries here. Although there was not really clear entry here, but I can see one entry here. Markets came here. You can see this imbalance inside there. That came here, give you a beautiful buy. That's imbalance inside this daily chart. Run higher. Markets came back again, imbalance. And you can see markets came to this key level. Markets broke this breaker block, came back to tested this breaker block level. Because there's a breaker block here. It didn't break, market broke the breaker, came back, tested it, ran higher. Markets came again, hit this other block right here, this other block, and then ran higher. Came back again, hit this other block as well, ran higher. So you can see the market was giving beautiful buy setups. And that is it. So currently, looking at this particular chart, I would say that um, anything can happen right now, right? So market is kind of giving a bullish setup. And looking at this, I can see imbalances above. So market might resume being bullish any moment from now. So I cannot really say because I've not done a thorough analysis on both on the fundamental standpoint. That's right. So we still have this old high here, this liquidity pool that was formed in March 2020. Because we still have this area here, which the market might go to in future. The market really wants to be bullish. Then you should have still have this draw liquidity up here. So the market really wants to be bullish, you can still accumulate and then run all the way to this side. So this will be a good target. This will be a target maybe in the next um 4 to 5 minutes. Market should come to this all-time high that formed in March 2020. Right. So this is about 3 years high now. Market might drop towards it since we are really bullish. I have broken all the highs. Market should run there if it really wants to be bullish. This is my overall draw liquidity. But for the lower time frame now, we have to still look at imbalances for this front, right? So the best thing you can do is to go to your chart and backtest this information because the more you backtest it, the clearer it becomes, right? So remember what I said. Market goes to liquidity pools. Those are old highs or equal highs, and market goes to imbalances. So you want to see these things form at the opposite side of a trade. Once you see the market form at the opposite side of a trade, and you have a structural confirmation, then you have a bias, right? So I've done other teachings on bias in my YouTube channel, and also my paid mentorship. You have deeper videos on this with entry and confirmations and all those things, which are 1 hour long. You can't compare YouTube and the paid mentorship, because the paid mentorship, our classes are usually 1 hour, 45 minutes. We go deeper there. So I'm not really looking to go so deep because it's a YouTube channel and people, YouTube videos run on data. So I have to make everything short so that people that have low attention span can also benefit, right? So if you want a deeper teaching on bias, check out other videos on this YouTube channel or join our paid mentorship where we have deeper, longer videos, more precise and details and all of that, right? So I hope to see you guys in tomorrow's teaching. So have a wonderful day. I hope this was eye opening. Have a wonderful day. Cheers and God bless.